Hi guys, my name is Robin and in this video I'll do my best to explain CBDCs. To be clear, CBDC is not a cryptocurrency. As an example, the Bahamas currently actively uses a CBDC. That's short for Central Bank Digital Currency. The Bahamas were the first and are still the only ones actively using a CBDC. They introduced it to their people last year in 2020. Every single e-currency is valued 1-to-1 to the Bahamian dollar. So the main reason why the Bahamas issued a CBDC is that the Bahamian people still often use checks and cash from ATMs. And the thing is, if you live in some of the remote communities of the Bahamas, it can be a half day or a full day trip to get to your nearest bank. They would like to see that the Bahamian people can accomplish the same thing through this new payment channel, the CBDC. So what is the CBDC? So CBDC stands for Central Bank Digital Currency. You will need to have a smartphone and internet access to use it. Or looking at the use case of the Bahamas, they already partnered with MasterCard and Island Pay, where they launched the first card linked to a CBDC account. So I hear you thinking, isn't this the same thing as my usual debit or credit card? What's the difference? Why CBDC? So CBDC tries to solve various problems such as bringing financial services to people without bank accounts and to reduce dependency on cash. CBDC can also help in transferring money faster and cheaper. For instance, the stimulus checks the US government sent to US taxpayers were done either by bank transfer if they had your bank account information or by checks in the mail. If there was an active CBDC, the government could send your stimulus check without any distribution costs. Another use case for CBDC is for the people that don't have a bank account. Especially in developed countries this is the case, but also in first world countries. For instance, in the United States, over 5% of households were unbanked in 2019 and 14% of adults did not use a payment card in 2017. Apparently, more people have a mobile phone than a bank account, and with their phone they can access their CBDC. Bitcoiners also often talk about this problem that many people don't have bank accounts and that Bitcoin could be the solution to that lack of access to financial service. Another benefit of CBDCs can be instant international transactions. So for me, I don't have any experience with delays in payments myself, but apparently payments can take days to clear. I'm curious, do you have any experience with delays in international payments? So then there are transaction fees. Generally speaking, small and mid-sized businesses pay higher transaction fees than larger businesses because more transaction volume equals lower cost per transaction. CBDCs can offer competitive transaction prices. Another big argument for CBDCs is that guest workers face high costs when transferring money back to their home country to their families. The average cost of transferring $200 to developing countries remained at 7% in the first quarter of 2019. Banks are the most expensive routes for sending money, with an average cost of 10.9% in the first quarter of 2019. It's crazy and ridiculous in my opinion. So another example of how the CBDC of the Bahamas, called the sand dollar, has an advantage over cash is that there are often hurricanes in the Bahamas that destroy ATMs or banks. The governor of the Bahamas explains that restoring the internet is far easier than ATMs and access to banks. Furthermore, he explains that if you live in some of the remote communities of the Bahamas, it can be a half day or full day trip to get to your nearest bank. I do wonder, why can't they just use the internet to access their money in the bank or pay for goods and services? Why travel an entire day to a bank if you can just access your money online? But maybe I'm spoiled living in the Netherlands since the internet penetration in households here in the Netherlands is 98%. But then again, for CBDCs to work, you need access to the internet, right? So looking at the advantages of CBDCs, I pretty much see most of them are helping people in the developed world. The only thing that might help me and others in the first world countries is fewer transaction costs for businesses that eventually could drip down to us as customers to see lower prices. And I'm not sure how this will look in the real world, since these transaction costs are part of business models of banks and payment providers. Then there is the BIS report, which they published on June 23. In that report, they wrote the following. By now, it is clear that cryptocurrencies are speculative assets rather than money, and in many cases are used to facilitate money laundering, ransomware attacks, and other financial crimes. Bitcoin in particular has few redeeming public interest attributes when also considering its wasteful energy footprint. In other words, Bitcoin is crap and has no use for ordinary people. This statement is part of the BIS report that they published a few days ago. BIS stands for Bank for International Settlements. The BIS is owned by 63 central banks around the globe. A central bank is the bank of the banks. If I'm correct, every country has its own central bank. So the BIS is the bank of the banks of the banks. In other words, it's the father of all the banks, the father bank. The Father Bank's report talks about that digital currencies are high on their agenda because of the growing attention towards Bitcoin and other cryptos. Therefore, they are wrapping up the urgency to launch their own digital currency, the Central Bank Digital Currency, CBDCs. Looking at the earlier discussed use cases for CBDCs, I can understand why they want to speed up launching their digital currency. Many of those use cases are similar to the use cases of Bitcoin, like bring financial services to people without bank accounts, instant international transactions, and guest workers paying high fees for sending money to the family. All arguments I often hear Bitcoiners say. So let's circle back to the bold statement of the BIS report of June 23. It is clear that cryptocurrencies are speculative assets rather than money, and in many cases are used to facilitate money laundering, ransomware attacks, and other financial crimes. So let's have a look at their source for this bold statement. They refer to a study published in April 2019, Sex, Drugs and Bitcoin. How much illegal activity is financed through cryptocurrencies? It's a study from more than 2 years ago, and that study uses data from the start of 2009 up until 2017. So it's basically a study from 4 years ago. In that study, they write that there's way more growth happening in legal Bitcoin users in 2017 than illegal users. For example, at the beginning of 2016, the number of legal and illegal Bitcoin users was pretty much the same, around 21 million users on both sides. From that moment until April 2017, the legal side grew with more than 250% to 77 million, whereas the illegal side grew with 30% to 27 million. So I'm not familiar with a more recent study around the illegal side of Bitcoin, but knowing Bitcoin's recent developments of companies like PayPal, Square, MicroStrategy and Tesla adopting Bitcoin, El Salvador making Bitcoin legal tender, it probably shifted to more and more legal users instead of illegal users. Therefore, the statement that cryptocurrencies only are speculative assets and used in many cases to facilitate money laundering, ransomware attacks and other financial crimes is a bit short-sighted in my opinion. It's pretty clear that Father Bank doesn't like cryptocurrencies. So in conclusion, what's the current sentiment around these central bank digital currencies? So I've also read the survey results that the BIS published in January this year of 2021. So in 2020, 65 central banks around the world participated in a survey of 11 questions around developing and using a central bank digital currency, CBDC, for their country. One of the survey results showed that 21% of the surveyed central banks think they will issue a CBDC in the next 3 years. One of the questions was whether the central bank of those surveyed countries have the legal authority to issue a CBDC in the first place. Without having the legal authority, issuing a CBDC isn't even possible. In 2020, more than 40% still was uncertain whether they have the legal authority to do so. More than 20% don't have the legal authority. Furthermore, there are various unanswering questions. For instance, there isn't a clear answer to the possible risk that people can withdraw their cash and savings from commercial banks at scale to switch their money to the digital currency of the central banks. If this were to happen, commercial banks would fail. In my opinion, there is still so much to be done. There are so many unanswered questions and I don't see central banks launching a digital currency anytime soon. There are privacy concerns since storing your money into the central bank's digital currency will probably be ID based instead of anonymous. Questions like, what sort of information should CBDCs contain? Will every transaction you make with that digital currency be tracked? In other words, can they see you bought a Big Mac last Thursday at 4 p.m? Can we as account holders refuse access to this data for privacy concerns? Who will manage this data and who has access to this data? Will the anonymity of paying with cash be gone? What will the collaboration with third parties be? How are commercial banks fit into all of this? And lastly, whether CBDCs will have a positive or negative effect on cryptocurrencies like Bitcoin is uncertain. As I just explained, there are still so many unanswered questions around CBDCs that it's hard to say what impact will be on cryptos years down the line. So one thing is certain, governments around the globe see cryptos as some sort of risk to their financial system. The anonymity and lack of control are some of the elements they don't like about it. But looking at the features of CBDCs, you know governments do like many of them, since cryptos and CBDCs do have multiple common characteristics. Anyhow, it's exciting times since there are so many moving parts in the current financial system. So this is all I got to say for this video. If you learned anything from this video, then please let me know what you learned in the comments below. Make sure to subscribe to this YouTube channel if you like the content. Also, don't forget to like the video if you enjoyed watching it. And besides news-related content like this video, I also post a video of my personal finance situation every single month. In that video I share how much cash I have, how much money I invested, where I invest my money, how much I personally spent and how much I saved. I'm sharing this because that's the initial reason of me starting this YouTube channel. Sharing my financial independence journey to $2.5 million. So if you're interested in hearing more about that, make sure to subscribe so you don't miss that video. If you want to know more about building an online business, make sure to follow me on my other YouTube channel. There's a link to that YouTube channel in the description below. Also check out my website creatoract.com for more info related to building an online business. Thank you for watching and hopefully we'll meet again next time. Bye bye.